The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin. Go ahead and give me a call real quick. If you got any questions, you can reach us right there. The number live right there. You can see it on Tiger TV, or you can call us at 877-927-6648. Again, that's 877-927-6648. So let's go ahead and look at where the markets are at right now. We got the S&P up 5 points. We have the Nasdaq flat right now. We have the Dow up 56 points, and the Russell basically flat, down just one tick. We got gold up almost $8, and we got copper up about 0.75%. And looking on over at silver right now, it's up about 1.5%, with corn up 2 points. We got soybeans up a few points, so basically the ag's pretty flat on the day. We got oil, though, up $1 right now. It's over 1%, so a nice big move in oil today. And we got natural gas is down over 1.5% right now. We got euro dollar up 34 pips, pound dollar up 62, Aussie dollar up 50, U.S. yen down 18 pips, U.S. Canadian down 27, and U.S. franc down 38. Dollar index showing weaker across the board, with the dollar being weaker and the markets being basically flat or in slightly positive territory at the moment. So let's see here. Let's go ahead and look at what news reports that we had come up today. Pardon me. All right, so we got this morning, Tuesday morning. I'm going to see last night as well. Last night we had no major news reports. We did have some, medium impact reports, but nothing just massive. But we were seeing, some interesting things. But we'll go ahead and just focus right now on the consumer confidence report. That number came in negative, despite these facts. The market decided to go ahead and rally. And so right here, I can pull up the S&P over here. We can look at this and zoom in a little bit. And I may even switch over, look at the overnight session. We had a nice dip right there. Gave a good opportunity for a potential gap fill trade. It was pretty tight right at the open. But if you went in, early in the morning, you had a nice trade. And so obviously the gap did fill and moved on higher, with that report come out at 9 o'clock Central, 10 o'clock Eastern. And so we can see right there where the news report came out, released, dropped down, but then decided to go ahead and push on back up. So it did respond to the news, but it really didn't have just a massive impact. And that report was pretty bad. It came in at 58.6. The expectation was 64.8. And that's the worst report since, looks like November of 2011. So worst CB consumer confidence report since November of 2011. So not only, of course, not meeting expectations of 64.8, but not meeting the prior number or the previous year. And they, again, that's where they survey 5,000 households, ask them to respond to relative, conditions. Now understand, this is a survey report, so it's not going to have usually as big of an impact as a key, economic number report is going to have. But nevertheless, it did give a quick pop to the downside there. And it's always important whenever you're doing the research and you're looking at potentially trading news, or maybe you're not looking at trading news. Maybe you're just long the S&P or short the S&P or whatever. But you want to know maybe how to tighten your stops, things like that, is go back and pull from one of the many websites that are out there, Forex Factory, there's a whole bunch of other ones. Go in and pull the historical information and go back on those days. Make sure you're looking at, if you're looking at futures, you look at, the rollover contract. Go back and look at the historical days and see how did the market react when it was better and worse than expected. Better and worse than last year. Better and worse than a year ago. And then, if it's, a new low, like today we had a new low, how'd the market react to that? That gives you a good idea not only what the market's going to do, but also gives you an idea of when that report comes out, if you want to take a position, what you can do. If you're in a position, maybe it's, hey, how tight should I set my stop? The market usually doesn't drop more than, 5 points, okay? Maybe that, that's the analysis you come up with. So you go in and you could have, a 5-point stop. Now, maybe ideally, you're already profitable at this point and 5 points is still locking in some profit. Or you may decide, you know what, if it's negative, it's going to come out, it's going to hit me, I'm going to go ahead and just get out right now. And so it lets you know, do you want to get out now? Do you want to loosen your stop up a little bit? You know, because if you didn't loosen it up quite a bit, you would have been giving up all the profit. Now, another thing is, I mean, you can always consider this is tightening up, you know, right before the news and then getting in back after it. So, you know, it came in negative, you were bullish, maybe you're still bullish for whatever reason. You could decide to hop back in at a lower price, and now instead of giving up 5 points, you actually have an additional 5 points of profit on the day. Now, of course, if it flew up 5 points, you'd miss out on that 5 points. So, you know, but one thing you will notice is it dropped down, it pulled back. You know, that's a big pattern to look for, okay? Is, you know, does it pull back after the initial drop? Usually in the first 10 to 15 minutes is when you're going to see the initial reaction off the news. It's the news, the true news impact, unless it's just something that's massive that nobody knows what to do with, is about 15 minutes at most. So after the 15 minutes, it's just orders taken back over. But during that 15 minutes, the orders firing off from the algos based on the news report, like they sort of own the market during that 15 minutes. It doesn't matter what your other analysis says, okay? Once that's over, your analysis kicks back in, and you start analyzing charts, you know, using fib levels, looking at deviations, you know, everything included to make your trading plan going forward. And you can also, of course, use the deviations, you know, whenever you're trying just to figure out what, you know, you want to do when that report does come out. So, but that is helpful. And I mean, notice right here, it came in, the report came out negative. It didn't pull back 5 points, okay? It did not pull back, you know, this distance right here in 1 second, okay? It literally took it about, you know, 8 minutes to reach its low, and it wasn't until about 10 minutes after that it actually started moving back up. So what this tells you is if you're in the report and you know, you're in, you're long, whatever, then you could hop in. You could literally, you know, go, hey, I need to get out. You could hop out. You could let it pull back, let it fall, wait until you get another bull signal, you know, go short, whatever you want to do. But you could see that, and you had time on this one. So is that consistent? And a lot of times you'll see consistency on the report is it comes out. You don't get the full impact. So you get this little move right here. So it pulls up, it pulls back right into the news. News releases, you get a drop bump. But, I mean, really from the, let's see, the close of that bar right there is 14.97. And let's just say it took you a full minute to, you know, to figure out that the news was negative. So let's see, 14.97, close of this bar is 1495.75. So you're talking, you know, 1.25 points. You get out, all right? And then it does its thing. It starts turning around. And let's see here. One of the things I like to look at is a moving average here. We'll add that in on our studies. Make sure we have it set right. All right, we'll go in and update that to an 8-period moving average. And right here, I mean, even on the, now this is 1 minute bar, so it'd be pretty tight, but you are looking at news. When I'm looking at news, I do tighten down to the 1 minute bars. So you're going to have the news, it closes before the news, about 3 minutes before down. So that could also be a clue that maybe you want to get out. And then you're bullish again, it crosses back above, that might be time to get back in. At this point, you might switch back over to, say, your 5 minute charts and go, okay, you know, so now it's back above that, let's go, you know, or you may wait till it crosses above the 8 on the 5 minute. Another, you know, the other time frame that I'll use is, you know, 10-minute charts. And everybody has their style. Some people like using 30-minute bars, you know, but, you know, 10-minute bars would have been way too big for news. So 1 minute usually like before the news, then flip into 5 minutes, and then maybe go into 10 minutes like after the news. And like I said, I do like to use the 10-minute bars. If for nothing else, I use them for deviations to know where to set my stops, to trail my stops up to. And also to let me know when the, you know, market has a potential reversal point underway. But, you know, just a few tips on there. Hopefully that'll help you out a little bit in your trading as, you know, you're trying to decide, you know, what is the, you know, correct course of action when news comes out. And a lot of people, you know, they're like, I don't trade news. It doesn't matter to me. You know, now if you're a longer-term trader, maybe it doesn't. Depends upon what the news is. But if you're a short-term trader at all, I don't care what your system is, the news matters to you. Okay? I'm not talking about, you know, you're building your entire system around news. You know, I love to trade the news personally. But you got to be aware of it, or it's literally like walking across the street without looking both ways and getting hit by a bus right after you got a clean bill of health from your doctor. So I don't care what kind of green and red lights you got on your system, okay? The news overpowers that. It is supreme at that moment. That's really the charts, and when it comes right down to it, the charts overpower the system. So make sure you're aware of it and have a plan for how you're going to react to the news, good or bad, when it comes out, based on whatever system it is that you use to trade. And that's one of the 4 pieces of diagnostic analysis that I tell people to pay attention to. And it's like, hey, look at the, when I say fundamentals, I don't mean, fundamentally the economy, whatever, But I'm just talking about the day-to-day news reports and how they impact intraday trading. And then the economy as a whole, if you're a longer-term investor, that's other things you got to look at as well. But definitely something, worth taking a look at and understanding and making sure that you know what reports are coming out each day. So that way you're one step ahead. That's the whole point of the diagnostic trading, being one step ahead of the markets, because this is about to come out. There's a lot of traders that literally don't know. I don't know how many times I've had people ask me, what just made oil move? And it's literally, we're talking like 5 minutes after the oil inventory report came out. And that's not, it's not a dumb question. It's just you don't know. So if you're trading oil, you better know when the oil inventory report comes out every week, because that can have a massive impact. If you're trading natural gas, you better know when the natural gas impact report comes out. If you're trading copper, you better know when new home permits report comes out. If you're trading, metals and things like that, especially like gold, you better know when the Fed funds report and different interest rate reports across the world come out. If you're trading currencies, you better know when that country, one of the two either the base or the quote currency, when they're releasing news reports, because that will impact the currency. So you need to know these things, and they're not that hard. It's not like you have to go search everywhere. There are plenty of easy websites that list every news report for the day, give you historical data, and you can take advantage of that. That information is free, but it needs to be part of your trading plan for the day and for the week. If you'll put it together for the week, then you're ahead on your week. And then let's see here. Let's go ahead. And the other thing I talk about, of course, is charts. So we're looking at that, and different styles of charts and different bar types. And there's just a lot of different things you can do. And when I say technical analysis, I mean chart patterns, bar types, indicators. The whole slew, the whole gamut, order flow, like volume. So basically everything that you can see like on a charting platform, just naturally like it's there. Okay. So, that's, I'm sort of putting, I know that may be too broad of a definition for technicals, but that's what I mean by technicals. It's using live data in front of you, on action and movement in the market based on price and or volume to determine what you're going to do next. Because we display that in different ways. We display it on, time of sells. We display it on the depth of market DOM trader, level 2 quotes, like that. We look at volume. The bars are built from the price action. So the bar types are made from the price action. The bar type patterns are made from the price action. The whole chart pattern, multiple bars put together where you have head and shoulders and all this other stuff, are made from the price action. So, that's when I'm including technicals. So it's all the below. And when we come back, we'll talk a little bit more about the couple other areas. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going through, we just went through talking about, sort of like what technicals all include. We talked about the fundamentals and how they're important. One of the other aspects I always go through is the deviation, so knowing your statistics and where those statistics should be kicking in. And what we can see right here, we have on the S&P currently happening at this moment here. So let me go ahead and I'll put the price level on there. Is 1503 is the deviation level, or 1503.25. So wherever you want to round it off to there. And basically, I get real cautious when it gets within just a couple ticks of the deviation. And especially if I see it happening on multiple indices. And so right now, literally the S&P is just a tick or two right away from breaking that deviation level. And so I have an alert set up right below the low here, 1501. So when it breaks 1501, I want it to notify me if I get a close below the 8-day moving average. Then I'd be looking to definitely get out of my, because it didn't break it yet. Otherwise, I'd be getting out right there. Didn't break my stop, but I mean it's right there, just a couple more ticks down. And now it doesn't mean I won't get back in. But it means right now I'm going to protect my profits that I have. I'm going to make the market move back in my direction before I decide to hop in on the trade again. So being long right now, very, very close to getting, stopped out on my trailing stop. So not a negative stop out, but stopped out on the trailing stop. Looking on over at the Dow, we also have the same thing happening. And right now, we can see that the market actually broke through on this bar right here. Broke through the deviation level, which was set right up at a high of 13,884. So this is the bar that broke it, so we set our stop right below that bar, okay? And then what we have is we actually have a close right here of the high is 13,883. So we actually closed a tick below. As soon as you close a tick below or more, then the next bar to break it, then we're going to move our stop up. So especially when you have a bar like this that flies up. So like right here, so we're looking at moving our stop up to this point, and we'll be watching right now to see, sort of how that, turns out. But that's where we have our stop, and this is actually a stop out. So getting out of the trade if it drops below the low of the bar that just broke it right there at 10:50 Central, 11:50 Eastern. The low of that one, 13,872. So if it gets below that, that'd be a hey. If you're in the bull, if you're on the bullish side, sort of at this point, I'd be taking my profits and then looking for. It doesn't mean I'm not convinced just because it hits and breaks a deviation it's going down. I want to see several other things line up, but that is basically my profit management system. So it's very simple. It's very easy. It's very black and white, so there's not a lot of interpretation. It gives me room to let the market move, let the market run. And one of the things that I think is important to notice is sometimes, you're not always going to get right there. We go over and look at a couple of the other ones. We got the Russell right now, and this ought to give you a little doubt too. We go over to the Russell, and it's trading right now up at, let's see, the high on it was 906.6, but we had a deviation all the way up at 910. So we haven't had a lot of movement because, right here, 905, here's part of the reason. 905 is the settlement price of yesterday, 905.1. Well, so we didn't hit a deviation. So what do we, is there anything to consider over there? I want to go back and look at ES. We'll show you this and bring it back and forth for you. 1497 right here, right there, okay, was our half deviation mark. If we go over to the Dow, and we'll come right back to the Russell and bring it all together, like I said. On the Dow, our settlement price of the previous day was 13,832. Now again, I'm quoting settlement price. I'm not quoting the last trade price on your screen. Okay? So settlement price being the volume-weighted average price of the last 30 seconds of trading before the market closes there. And they post that up there on the CME Group's website. And that's what you need to be using for, pivot points, gaps, things like that. That's what the professional traders use. It's not the last trade on intraday chart. Now, if you go to daily charts, you'll see, usually on most platforms, you'll see the settlement price on the daily chart. But let's see, if we go right here, just to show you, a close 13,831. And watch this if I go over now to daily. Look at it. Let's see if it lines up. 13,832. So see, it's actually showing me the settlement price. They're both the last price, right? But this is the settlement price on the daily chart, 13,832. And today it's one tick, but some days it's 1.5 points. And so it's important that you understand how that works, how to use it, so that way you know what true settlement price is. Again, it's based on, you're usually going to see it on, like I said, most platforms, you'll see that true settlement price on the daily chart, not on the intraday chart. They may line up, but they could be significantly different. And part of the reason that's so important, that's how they determine mark to market. That's how they determine whether something's in or out of the money on an option for exercise. And so there's just a lot that goes into settlement that is so involved in the market in so many different ways. Now, we come back, I'll look at Russell with you and go, okay, well, if we're seeing all this different action right here, then, how does that impact us on maybe a different indice and the decisions we might want to be looking at? So I'll bring that right back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And if you don't know, if you haven't registered, make sure you're registered right now. We're doing the Great Panther Silver giveaway. And you can register right here on our website, Great Panther Silver Giveaway, Super Giveaway, free to enter. And just fill in your information. That's all you got to do. Hit submit, and you're entered to win. And right now we actually have an announcement for another winner, giving away some silver to him. John of Willard, Illinois, congratulations. You have won some silver. And definitely encourage you to give us a call anytime today before 6 o'clock. And you can reach us at 877-927-6648. Again, that's 877-927-6648. And again, give us a call anytime today before 6 o'clock, so that way we can get it out to you right away. All right, so let's go ahead and hop back on over and just talk about, using the deviations and everything else and how that can help you and tightening your stops and just putting the whole picture together. And one of the things I was noticing is, hey, on the Dow, we hit it, it popped up, it's actually moved back up a little bit. It was coming down like it might want to, but it pushed back up over here. And so right now we have our stop just set below the low at 13,872. And you need to take note of that happened right there at 10:20, okay? Now let's go over here and let's check out what happened on the S&P. And on the S&P, we broke the level, we got close to the level, haven't broken it yet, but at 10:20 we need to sort of take note, all right? So right over here we're taking note at 10:20, all right? And then we go over a little bit further, and notice on the NASDAQ, we have not hit the level yet, okay? But right at 1020, look at this peak on the NASDAQ. And if you actually go in and you pull the what is one full implied deviation, okay, and we actually put the implied deviation on here. So 24 points, and the half one is obviously half that, 12 points. And what you can see is it actually broke the 12-point level earlier in the morning, okay? And when it broke that, it went from the low. And this is what I want you to understand is you can also look at the lows. You don't just have to look at from settlement. So with the market starting to reverse, there's a low where it broke up, so that could be a stop for you if you were long. You probably would be short in the morning, especially after the news. But that alert right there could be you know what, hey, I may need to be looking to get out because this thing is broke above this level. So that could definitely be an alert for you when it breaks above the deviation level on the downside there. But let's go ahead and look back up. It's actually one full deviation from the low. It breaks it on this bar right here at 1030 on the very next bar. So right after the Dow broke it, you can go over and check your other indices. So once any of the indices break it, you can check the other indices, and you can tighten up your stop to the low of this bar right here, okay, which would be 2737.5. And then right now that would have you stopped out of this trade looking for potential additional entry, but you would have at least protected your profits on the way back up, and so you'd be out of that trade right now. If we go on over and we look at the Russell, we can see the same thing happened, okay? So right here at 10:20, it actually broke through a one deviation move, which on the Russell, we can see again right here inside the diagnostic numbers area, you can see on the Russell was 9.8, so basically about 4.0 right there is what we're looking at for a deviation move. So 9.8, and so what we understand is that's a full deviation from the low that we can take, or a half deviation from the low that we can take advantage of. It's on its way back up. The other one just broke its half deviation, like actually broke the positive half deviation, moved to the upside. So now I want to look at a positive half deviation across the board to see if I need to be tightening any stops when that happens. Well, I go over here and look at this. It just broke the half deviation, so you tighten the stop. You would have tightened, you would have got out right there, and the market's been flat ever since. So it doesn't mean the market isn't going to go up, doesn't mean it's not going to go down, doesn't mean you don't have other trades. What it does mean is you haven't been in the market for 2 hours almost, basically getting nothing for your risk. So that's, you would have been giving away money, made a little bit, giving it away, made a little bit. So getting nothing for your risk during this time, and that's the big advantage is you're not, basically, you could go look for other trades. You could look on other, you could look at metals, you could look at FX, you could look at other indices and see if there's potential there. You could look across the board, but that one has hit its stop as of 1050, okay? And noting that it hit its stop is also, beneficial just to, again, when you're looking at the other major ones. It's like, hey, okay, well, as of 1050, that one hit its stop. This one, we actually tightened up the stop at 1050 on the S&P. Sorry, on the Dow. On the Dow, we tightened our stop at 1050. So it hasn't been stopped out yet. So, hoorah for the Dow there. And looks like it's trying to push on up. And then looking on over, we can see the same thing. We're almost, it's really trying to get to that deviation. Like I said, it's basically the deviation is 1503.2. So if we round down, it's 1503. If we round up, it's 1503.25. So it's literally just, but notice, it's just hanging right at that. If you add in bid-ask spread, then that adds a whole nother layer to it. But it's really trying to figure out if it can break through that half deviation mark or not. And so tightening your stop definitely proves to be wise at this point. And now that we've actually made a higher high, we're even closer than where we were before. You could even decide, I'm going to move my stop up from 1500. I'm going to go ahead and move it up here. And, on this one to the low of 1502, you can say I'm going to put it, 1501.75. So you just, depending upon what system you use, most of them have like a drag and drop feature. So you can say, if it breaks, basically 1500 right there, 1502, if it breaks it. So you can put it, there we go. Then it'll basically alert me when it breaks that. So if it hits it, that's one thing, but I want the, below. And if you want to really make sure it doesn't alert you till the below, then you can move it down, one tick to 1501.75. And then it'll pop up. And another feature that you could take advantage of if you haven't done it, let me see if it's here. Yeah, under application settings. And let me show you this so that way I can just got to make sure that, all right, take out my email there. You can go in here and you can, so let me show you this again. If you go to setup and you go to application settings. Like this is in Thinkorswim. You can also do this in Ninja. But you go in here and you can go to notifications, and you can put in, what I like to do is I put in my phone number, okay? Now you can't just put in your number, and you got to put in the right combination. Like for AT&T, it's your phone number, so 817-555-1234 at txt.att.net. And if you just Google, text, email to mobile, text mobile email, you'll be able to find Verizon and, Alltel and Sprint and T-Mobile and everybody else that's out there. But you could also have it send it to your email, and so there's pretty cool stuff, and they do have the SMS confirmation built in now, so you can take advantage of that. That's one of the new features. I like to use the text feature, so you can use it either way. It really doesn't matter. But they tell you which ones they support. So if they don't support one of the ones that you have, okay, then all you got to do is put in your phone number at whatever the text message email is for that carrier, and it'll send the email to the carrier server, which will instantly go to your text message. So it's pretty cool. But they have basically 2 emails you can put in. One of those could be a text email, and they've now added the automatic SMS, which is a pretty cool feature. So, but like I said, the other way to get around the SMS issue is just to go in and put it, with the @ like txt.att.net, and that'll work for you. And I think Verizon, I think it's vtext.com. So, but anyway, so that's just that basically is how they're doing it. So that is one thing that can help you out. Let's go ahead and look at a few of the markets now that we've covered really the S&P, the Dow, the Nasdaq, and the Russell. We'll go ahead and summarize and look at a few other ones. But before I get into all of them, just to make sure we do have our fundamentals covered, I'm going to go through and I'll throw the deviations up for the day on there so you can take a sneak peek there and check them out. Again, we update these every night at 7 o'clock. You can get access to them right there inside tfnn.com. Get a 2-week free trial right away. Just click on Diagnostic Box Spread Analyzer. Click on that. You'll get the deviations. You'll get the binaries. You'll get the spread education. You'll get the live Diagnostic Spread Analyzer, which is where I go in and I actually show you with live data feeds. And you can go, okay, I want to trade the S&P 500, and I want to, let's just say, sell it or buy it, and I want to have at least a 1-to-1 or better, risk-reward ratio. I don't want to risk more than $100. And there you go. So now this is like, okay, you can sell the S&P 500, and you can sell it for, as little risk as, let's see here, for a decent trade. This one's $10 risk. That one's $35 risk on the trade, so not bad. If you did 5 contracts to equalize it for, where you got $50 a point, then you would basically be risking like 150. So it'd be like a 3-point stop loss. The difference is you could go in right now and you could short at the high of the market, okay? With a 3-point stop loss, but let's say it goes up 4 points and then comes down, you can't be stopped out of the trade. You have until 4:15 for it to come back below where you sold there at 1501, 0.7 there. You have to come back to that point to be at break even. If it goes below it, you're making money, okay? And for every tick in between the ceiling of 1505 and 1501.7 that you recover, you actually get money back. So if you did 5 of them, you get $5 back for every tick, because there's on a Nadex spread, it ticks in 0.1, which is really cool. One of the things I love about the Nadex spreads on the S&P is they tick tighter than the E-minis. So instead of ticking in quarters, they actually tick in 0.1. And so I like the Russell, I like the Nasdaq, the Russell, the S&P, and the Dow. Nasdaq a little bit wide on how it ticks, but the other 3, I love them on the spreads. The binaries, they're all good, but on the spreads especially. And so right now, if you want to go in and call a short because it's hitting that deviation, looks like it's coming down, like let's say right after it breaks this level, then essentially here's what you would be getting. Okay, so if we went in short at, let's just say 1501.75, let's say that's what we're actually going to get in. Okay, then you'd be able to make your stop would be at 1505. Okay, so right up here. And then you'd be able to make money all the way down to 1460, which, come on, that's more than enough room. And so if I go in here and put 1505, and then I can grab that right there and edit it and bring it on down to 1460. I like to draw them on the charts. It makes it make a little more sense. And let's see here, just to make sure I got all my numbers right. 1505. Oh, it's down to 1475. Okay, so just to be accurate on that, 1475. So I don't think anybody would be complaining about getting a drop to 1475, catching that. And people go, oh, it's limited. I'm like, seriously? You know, you made like 25 points on the S&P. I think you should be happy. So it goes all the way down, and then, you know, we could also edit it again if we wanted to and say that we wanted to expire out here at 4:15. So 3:15 Central, 4:15 Eastern, so whatever you have your chart set to. And then, doing it backwards on me. But let's see here. Do it one more time, and then you'll be able to see exactly how it works. Okay, we got to do the military time. So instead of 13, we need to go ahead and do 15. There we go. All right. So now if I, you know, shrink my chart and, you know, basically put it in that perspective where I'm just zooming way out and down here, then the most I can lose is up to 1505, okay? And which is a couple points above the high of the day. So that's basically a 3-point stop loss from where we're at right now. All right? And so I could short right now on this trade, and I'd be able to make money all the way down to 1475. Every tick in between, if it, you know, like if I go in and let's just say we, you know what? Let's just do it right here. So we pull this up, and one of the nice things, this actually ties directly into the Nadex platform. And so it opened the ticket for me. And so I can go and I can sell it. Okay? And we have hit our level, our stop level. So if we decide to go short on this trade, then I can go in and just hit place order. And now that order's received, okay? And I got filled at least 1501.2 or better, because it's a limit order. All right? I can't lose money above 1505, and I can make money all the way down. Now if it expires, say, at 1503, I still get 2 points back. I don't lose all of it. It's not an all or nothing. It's not like a binary where it's an all or nothing. So it's just like in the market. Wherever you buy at, wherever you sell at, wherever you buy at and it expires out, it'll settle you at that price like you're exiting there. Then you're actually able to go in and you know, get some of the money back that you put at risk. So just because that's your stop loss doesn't mean it's your stop, like doesn't mean it's an all or nothing. And just because it's your stop loss does not mean that you're going to get stopped out if it goes up. I mean, the market may decide to go ahead and rally up to 1505, 1506, 1507, and then maybe it falls back down and settles at 1501. Well, you know what? Oh, great. I'll make a couple ticks on that. Maybe it comes down and settles at 1485. Well, that'd be fantastic. I'd make a lot of money on it. So, but bottom line, you know, I only have, you know, a few points risk on the trade, and I don't have to sit here and babysit it. The next thing I can do is I can go on over and go into my open position that I just placed right here. So I'll show you this right here in the Nadex platform, okay? And then we could say, you know what, let's go back for, you know, a half deviation from the high, which is basically going to be back at settlement. And we could say, okay, so we're going to target right around, you know, 1497. And I can put in a take profit for that price just by clicking on this right here. And put on a take profit, 1497. All right. And let's see here. So with that, then put, you know, place the order to buy it back at 1497. And now I'll basically make 4 points on the trade if it wins, and I will lose a few points if it loses at most. Lose a few points. I'll make up to 4 points if it takes profit. All right, we'll stay right there. We're going to come back, and we have our Silver Panther giveaway winner on the line. We'll announce him and talk to him right after the break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of from shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're going on through. We got a caller on the line right now. And let's see, John, you're in Hill, Illinois, right?
Yes, I am.
Well, we want to thank you for listening to TFNN.
I do by way of YouTube.
Awesome. Really? By YouTube? That's awesome. So you go back and check out the archives.
Yeah.
Sweet. Yeah. So how long have you been listening to TFNN?
Oh, probably 3 months.
3 months. Great. Awesome. So what are a couple of the things that you've learned listening to the network?
I'm trying to learn as much as I can about the options. That's something I don't understand that well. Okay,
cool. Well, you're in the right place. And when you get a chance, always call in because we'll answer your questions about options and help you out. And, looking at option chains and charts and Nadex options and call put options and future options and everything else. You have any questions about options right now I can answer for you?
I guess not.
All right.
I'm so excited about the silver, I can't think about the options.
Well, that's awesome. So congratulations on winning the silver. Thank you for entering, and thank you for listening.
Oh, I want to also tell you a thing. I'm a stockholder now in the silver company.
Oh, really? Excellent.
Yeah, I bought it about a week ago.
Okay. Great.
Just a handful of shares.
Yeah. Hey, well, more than one way to play silver, right?
Right. Well,
Awesome.
I had a gold company, and it got bought out, and so I had to use that money up somehow.
Well, hopefully that works out really well for you. That's awesome. So we're pretty excited. It's going very well. So
Thank you much.
you bet. Thank you so much for calling in. Appreciate it. All right, for registering and listening. Okay, have a great day, John. I appreciate everybody out there listening and listening to our shows. And it's glad to hear that we're here to help people and that you're able to learn about options and futures and forex and stocks and ETFs and ETNs and metals and just on down the list. So let's go ahead and take a quick look at the and basically what reports are coming up. So tomorrow we have some pretty big things happening. We're going to have sometime tomorrow, okay? We'll have the German bond auction. We'll have the Italian bond auction. German shouldn't be a big surprise. Italian, that one is going to be watched closely. So, and it is tentative, okay? So that one is a tentative thing, but that can easily impact the forex markets overnight. So be aware of that. We also have the ADP non-farm employment change report coming out, and you want to be ready for that. That happens at 8:15 Eastern time tomorrow. And basically what that is sort of their way of predicting what the final number that they're going to report on Friday. Okay, they're going to go in and they're going to report the non-farm employment change. But that's like one of the first three revisions. Okay, and they revise it 3 times. The last one is considered the most accurate. And what ADP is trying to do is actually trying to accurately forecast what not the one on Friday will be, but what the final one will be after the third revision. Okay, so it actually is considered to be, in a lot of ways, a better indicator because they're waiting on a lot of reports to come in when they first do that report on Friday when the non-farm comes out. So the ADP one, that's the whole purpose of it. They expect it to come in at 1.1%, and so we'll see exactly how they do that. They did revise the last number up, and 1.1 actually, though, just understand 1.1, even if it meets that expectation, that is worse than the last report. It's actually would be 1% would be one of the worst report since July of 2009. So that's not even a great number if they do hit it. And then we'll have crude oil inventories and a big announcement, FOMC statement, federal funds rate coming out at 2:15 tomorrow. Make sure to have those on your calendar. Be ready to protect yourself, as we talked about earlier in the show, when the news comes out. Y'all have a great day. Have a safe day. Good luck in the markets. Stay tuned. We have another great show coming up for you, and I will see you tomorrow.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.